Never make the mistake of believing a leaked memo just because everyone else is panicking about it, especially when the numbers don't even match reality. Today, we're diving into a story that has blown up across financial YouTube, Reddit, X, and every silver group on the internet. A video claiming that Morgan Stanley just ordered all their clients to dump silver before the end of the month has gone insanely viral. Over 100,000 views, thousands of comments, and a whole lot of people convinced that a major bank is secretly preparing for a silver market meltdown. But here's the real twist. The memo isn't verified at all. The creator even admits it. And yet, the silver market is genuinely under pressure. Inventories are falling. China is restricting exports. The CME did raise margins by almost 50% in 1 week. So the panic feels believable even if the memo itself isn't. And that's what makes this situation so dangerous and so fascinating. Stick with me, because by the end of this video, you're going to know exactly what's real, what's exaggerated, and what you actually need to watch in the weeks ahead. Let's break this down piece by piece. The memo that exploded across the internet. So here's how this whole thing started. A creator on YouTube claimed they got access to a leaked internal memo from Morgan Stanley, a memo supposedly instructing clients to exit all silver positions before month end because of an imminent catastrophic event. Sounds dramatic, right? It gets even better. The creator opens the video saying things like, "I've seen the memo myself. I confirm this with multiple institutional sources." But then, at the very end, after the fear has already set in, there's a tiny disclaimer. The existence and content of the memo have not been officially verified by Morgan Stanley. Hold up. You're telling people Morgan Stanley is evacuating the silver market, but you can't prove Morgan Stanley ever wrote a memo? Reddit threads popped up immediately. Can anyone verify this? Has anyone actually seen this memo? Nobody could confirm anything, and that's because the memo, at least in its circulated form, almost certainly isn't real. But here's the catch. The silver market is so brutally tight right now that a memo like this feels possible. And that's where people got hooked. So let's talk about what's real. Real market stress. That makes the fake memo sound real. If you've been watching the silver market for the last 6 months, you know it's been absolute chaos, and not the Twitter influencer chaos. I mean real, documented, structural pressure. 1. Comex registered silver is falling, but not like the viral video claims. The viral video claimed Comex registered silver had fallen to 32 million ounces. That number is not just wrong, it's off by almost 4 times. As of January 2nd, 2026, Comex registered silver sat at 127.6 million ounces. The real number is still concerning, but the viral number is complete fiction. What is real is the depletion rate. December 2025 deliveries, 66 million ounces. That's 52% of the entire registered inventory claimed in 1 month. And December is normally a quiet delivery month. This isn't a normal drawdown. This is the market acting like someone flipped a switch. 2. Real price divergences across the world. Shanghai is trading $5 to $8 above Comex. Physical dealers are quoting higher prices than the futures market. People on the ground are paying $78 to $80 for actual metal, even while Comex prints $71 to $75. That part of the viral video? Totally accurate. But the $130 per ounce claims in places like Dubai or Tokyo? Yeah, those only show up on low-quality financial blogs, not from actual dealers. 0 major bullion shops confirm that. 3. China just squeezed the world's silver supply. This is one of the biggest stories the viral video barely talked about. China just put new export licensing rules on refined silver. Only state-approved producers with at least 80 tons annual capacity, over $30 million in credit facilities, are allowed to export silver. That means many refiners who used to ship metal freely can't anymore. China controls a huge chunk of global refined silver. Cutting exports is not a small thing. It's like someone quietly shut a valve on the global pipeline. 4. The CME margin hikes are the real evacuation signal. This is the part that makes real analysts raise an eyebrow. Late December, the CME group raised silver margins like they were slamming on the brakes. December 26th, plus 13.6%. December 30th, plus 30%. Total increase in 1 week, 48%. That is extremely rare. Margins only spike like this when volatility is out of control. The exchange sees real risk. Major players are getting squeezed. And CFTC data show that 22 major banks were collectively short 212 million ounces. With silver hitting $84 per ounce on December 29, their mark-to-market losses were brutal. Some mid-tier trading houses in India literally went insolvent. At least 44 firms in Rajkot couldn't settle their accounts. That actually happened. And here's where the real problem comes in. The viral video didn't need a fake memo. The real signals, the documented ones, are already showing that the silver market is under extreme stress. So why cling to the memo? Because mixing real market fear with a dramatic, unverifiable document creates a story that feels too good to question. It's a mental trap. If Morgan Stanley is evacuating, something big must be happening. But Morgan Stanley isn't evacuating. Their actions actually show the opposite. Exploration, development. Let's look deeper at what's real, what's verified, and what isn't. Verified facts. Registered Comex inventory is 127.6 million ounces. December deliveries were 66 million ounces, $5 to $8 Shanghai premium. China's export restrictions are real and active. CME raised margins nearly 50%. Silver ETFs now hold 863 million ounces. Institutional investors are locking in long-term supply deals. Price discovery is breaking down. These are the real stress signals, not verified. The Morgan Stanley memo, the end-of-month evacuation order, the claim MS won't accept new silver business, the 32 million ounce Comex number, the perfect storm model attributed to MS, the catastrophic event prediction, rumored $130 an ounce physical trades. These are the dramatic claims with no evidence. Why the memo spread so fast? Because it fits the mood of the market. If inventories are falling, if Asia is paying more, if China is restricting exports, if the CME is panicking, then a leaked memo sounds believable. That's the strategy behind good misinformation. You take real facts and you inject a dramatic fictional center. It feels too real to question. Here's the part most people don't know. If Morgan Stanley really believed silver was about to implode, they wouldn't be releasing new gold and silver linked notes, which they literally filed with the SEC on December 7th. You don't expand your silver product lineup 2 weeks before secretly telling everyone to run for the exit. Banks don't work that way. And that's the aha moment of this whole story. The memo doesn't match Morgan Stanley's actual behavior, but the silver market is in trouble. Just not because of a leaked memo. The market is stressed because supply deficits keep stacking up, deliveries are getting heavier, industrial demand is sticky, inventories are thinning, Asia is outbidding the West, margins are rising, banks are under pressure, the crisis is real, the memo is not. At the end of the day, here's what you need to take away. The viral Morgan Stanley memo is almost certainly not real. The creator contradicts themselves, can't verify anything, and uses numbers that don't match official data. The memo isn't the story. The real story is that silver is under historic pressure, documented pressure, and the world's supply system is starting to stretch in ways we haven't seen before. You don't need a fake memo to see what's happening. Watch Comex inventory. Watch China's export restrictions. Watch CME margin policy. Watch physical premiums. Watch industrial demand. Those are the real signals. Everything else is just drama.